Hey, it's Vanessa Hardy from Long and Foster, and I wanted to talk about building a custom home. I just recently put a buildable lot on the market for sale in Arlington, so I've been talking to a lot of people recently about construction to permanent financing. So if you are thinking about a custom build, this is the video for you. I just want to talk about some of the basics of a custom build. So um, it's very much, as far as financing goes, the process is very much like a regular mortgage loan. There are some major differences, but it is not as complex or scary as some may think. So, if you are looking for your perfect home and you're having a hard time finding it, considering a custom build is definitely the way to go. So, let me just talk about financing. And let's say you're looking at Arlington or Falls Church. Those are great areas because you can find lots still. You can still find lots in Arlington and Falls Church, and those are neighborhoods with great schools, great resale value, and you can find a lot where you're not dealing with an HOA, and so that's going to make a custom build a little bit easier. So here's the thing. The main thing is you have to be able to qualify for a mortgage when it comes to building a custom home if you're looking to finance the land and the construction. So let's assume you're ready, you can qualify for a mortgage. Here's what the lender is going to be looking to do. It is possible to close with just one loan, and that one loan will cover purchasing the land if you don't already own the land. That will cover purchasing the land, and it will cover the actual construction of the home, all in one loan. So the lender, when you go to your loan officer and say, "Hey, I'd like to finance this entire project," the lender is going to want to know a few things. In the same way with a regular mortgage loan, the lender is going to look at your sales contract and then send out an appraiser. The construction of perm financing is going to work in a similar fashion. In this case, the lender wants to know who's your builder. They want to make sure you've chosen a solid builder. And I'll do another video on choosing a builder because that, of course, is very important. So the lender is going to want to know who is your builder. They're going to look at the specs. So the builder is going to give you all of this information. The lender is going to want to look at the specifications of what you're building. They're going to look at all the plans. They're going to look at the budget because the lender wants to know, okay, here's how much money you think this house is going to cost to build. But the lender is going to have their own people scrutinize that because they want to make sure that the budget makes sense, that you can really get the house you want based on the budget you're working with. So they're looking at the plans, the specifications, the budget. They're going to look at the other homes in the neighborhood. They're going to say, okay, once this house is built, is it really going to be worth what we think it's going to be worth? So all of that is taken into account by the lender. That's their underwriting process. They're going to make sure all of those plans make sense, everything lines up, the value and what they are expecting the build to cost and how much that home is going to be worth when the project is finished. Okay, so the lender does all of that research and let's say, all right, this is a go. Here's what happens next. You're going to have a closing, just one closing. And at that closing, let's say you need to pay for the land. So Joe Smith, your seller, he's going to get paid for his land when you close your construction to permanent financing. Joe Smith will get paid for the land and then you're off. So here's how the process works with your builder. The builder and the lender and you, the custom build homeowner, you're all going to know in advance that there is going to be this pot of money that the lender is going to hold. And there are going to be draws out from that pot of money. Everyone will know when that happens, and everyone will know before anything happens with that property. The builder will know, the lender will know, and new homeowner will know how that draw will take place. So it may be 5 or 6 times that the builder will have the opportunity to get money out of that pot while they're building the house. Builder won't get all of that money all at once because the lender wants to make sure that they're monitoring the project so that the money is actually going to where it should be going and that the builder is going along with the build according to the plans that everyone agreed to right at the beginning of the process. So, um, everyone will know what those stages are for those draws. It may be foundation, roofing, drywall, stages like that, so that everyone knows by the time the roof is up, builder is getting this much money. By the time we get to the point where we're getting into drywall, builder will be getting this much money. That's how the draws will work. Everyone will know in advance that that's how it's going to happen. And then once you get to the point where the house is almost done, when it's done and you've got a certificate of occupancy, your loan will automatically convert into a permanent loan. And so you never have to go back to close again once, you never have to go back to settlement. I should put it that way. You never have to go back to settlement once you've got that certificate of occupancy. All you have to do is move in and you've got a loan that goes on for, say, another 30 years. So if you're interested in a custom build, if you're interested in how you choose a builder, how you find a lot, and how you actually get this thing financed, I work with buyers and sellers in DC and Northern Virginia on complicated transactions just like that. Please feel free to give me a call, use me as a resource. I'd be happy to help. Thanks.